Rents are going down, right? It's time for the Southern California Rental Market Report, where we give you the actual and factual numbers for rental rates in Southern California. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers and renters and landlords navigate these crazy days. And we're here with a big update on the median rental rates in Southern California counties, broken down by unit type, plus the number of units that have rented. So if you're ready to dive into the numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button. And let's get started. But wait, before we dive in, a few important points. One is the data for rental rates is very fragmented. We're using the California Regional Multiple Listing Service, CRMLS, where a lot of properties are posted, but it's not everything that's out there. Some landlords decide to use apartments.com, Craigslist. It could be rented off from a sign. There's no record of that. There isn't a master database of transactions for renting. And it's also not including any rental renewals. So you don't know how much of the increase that the tenants were given. The data you hear about in the news, that tends to be from large apartment buildings. It isn't necessarily including the numbers on small mom and pop landlords or single family homes. So it's important to understand that there are limitations in the rental data no matter what sources you're using. We're going to break it down by county. We're going to take a look at the number of units that have leased in Marches going back to 2019. We're adding more data. And we're also going to look at the median prices for respective bedroom counts. So what's cool, we broke it down by bedroom count. You can see the studios, there just aren't that many that tend to be listed on the multiple listing service. So that data isn't really going to be all that statistically significant, but still worth putting on there. And then we can see in a given county where they tend to have more rentals. At what point? Is it 3 bedrooms? Is it 2 bedrooms? Now, this is all mixed together. This is condo. This is houses. These are mom and pop landlords. And then these are big corporate landlords that put their stuff on the MLS. It's not all the data. As we've talked about before, the data is fragmented. But we're just going to compare these numbers. This is what we got. One other important thing we've added in March of 2019, which is theoretically a normal month for data. March of 2020, numbers are starting to change due to COVID. And all the data after is after or during and after COVID. So that there's craziness in the numbers. So it's helpful to see March of 2019. I put it in this weird blue color so that you can see it quickly. And in many of the counties we're going to look at, it's higher. There are more rentals that have traded in the month of March. In a normal year, you'll see that blue, and then black is this year. So you can see black and compare and see how many units have traded. So take a look, and our email newsletter subscribers, they can get this data and take a closer look. But it is easy to see that 3 bedrooms are the most popular in Orange County. And it's also easy to see that the number of rentals is down as compared to a normal year, but not our lowest. In fact, you can see that March of 2020, which theoretically was not a normal month, there were still plenty of rentals that were trading. And then let's see what's happened to prices. Now, again, studios are not all that statistically significant, so don't look too much into those numbers. But you can see some of the others, particularly 2 and 3 bedrooms, and even the 4+. There were a lot of units that traded, so statistically significant when it comes to the median home price. And you're going to see this in general. We've got a slow increase and then a fast increase as we get from 2021 to 2022. And then it has slowed down again. So year over year, the increase in rental rates has slowed down, but we'll see in Orange County that there was a big increase from 2021 to 2022. And that correlates with what we saw in the increase in inflation rates as well. But what you can see here is that this year, so despite what you're hearing in the news, how rents are dropping, for March of 2023, we are still up year over year for Orange County for these respective bedroom counts. And that rate of increase, it has slowed. So you can see, and that's a healthier rate of increase. For example, 4+, it's a $50 year over year increase. For 3 bedrooms, $100 year over year increase. These are more sustainable increases in the monthly rental rate. Moving into Los Angeles, we can see the black line is this March here, and then we've got that blue line. So the black and blue lines are pretty close together for the 3 bedroom. and 2 bedrooms. And look at the dramatic drop that we have in 2020 in March as compared to the other years that we're looking at. And looking at the year over year rates, we can see that some of them are the same. The 1 bedrooms and 2 bedrooms year over year are the same number. Some increases in the 3 and 4 plus. And there was a slight drop between 2021 and 2022 for 4 plus bedrooms, but it has since gone back up for March of 2023. So we're seeing an increase. Now, the eviction moratoria have ended in LA. This was the last month under eviction moratorium. So we will see if there's a change in the data. Theoretically, landlords will be able to get their units empty if someone hasn't been paying, although it still will take some time, and then they could re-rent it at the market rate. So we'll see if there's a shift in either number of units rented or in the median rate in Los Angeles. And don't forget that we work with landlords, helping them place tenants. Not to mention we work with buyers and sellers as well. Whether you're an investor, first-time home buyer, or experienced client, we are here to help. We have a regional sales and marketing office in Orange County and Los Angeles. Here at Riverside, we can see a difference in the curve. So there's actually 4 plus bedrooms. More of those are being rented in Riverside. Then we can see some of the other unit mixes. So some 3 bedrooms were more popular in Orange County and LA. We can see, again, similar trend where there were more rentals in 2019. And the numbers of rentals are down in 2020. 3, but still strong. Moving into the rates, and we can see, again, studios, not enough to be statistically significant. We do see a drop in the 2 bedrooms. So we see this drop of $200 in the median price in 2 bedroom units. And this is why it's helpful to look at a breakdown of the unit types, because you'll see, so 4 plus, it's the same year over year. 3 bedrooms are up. 2 bedrooms are down. So when you factor these numbers together, it could potentially look like a decrease in the year over year rate in Riverside, when in fact it actually is a kind of a wash when you look at it from the mix of unit type. Now, again, 4 plus are the most popular, and that is the same number year over year. And we see the big increase, and it is slowing down as we'd expect. San Bernardino, another market with a 4 plus, is the more popular rental unit type. A lot more houses in Riverside and San Bernardino that rent out versus smaller units. And we can see as well that 2019 is higher than we have in 2023. The 2 bedrooms are very similar, but the 3s and 4 pluses, there's definitely a difference in the number of units as compared to a normal year. And looking at the median prices for the most part are up. We do see that the 4 plus, that has stayed the same year over year, but an increase in the 3 bedroom, a drop in the 2 bedroom. So again, important to look at the unit mix and see the differences in the changes in prices. 4 plus being the most popular, it looks like rents have flattened here in San Bernardino. Ventura, back to a market where the 3 bedrooms are most popular, and not as many units rent in Ventura, so these numbers aren't that far off, although we can see the 2 bedrooms between 2019 and 2023, big difference there, but the other unit mix is not so far off. And moving into the rates year over year, we see an increase. And big increases in the 3 bedroom units. If you look back at 2020, you can see a huge increase since then, over $1,200 increase. And we can see as well an increase in the 4 plus. So this is a market where we're not seeing a decrease. The 1 bedrooms went down slightly. That's also less statistically significant. And finally, San Diego. So what's interesting to see here is you can see that in March of 2021, it was more popular for 3 bedrooms, whereas now it's more popular for 2 bedrooms, and it was more popular in 2019. So there's a shift in how people are renting in San Diego in these past few years. So that's an interesting trend to look at. You can see that the black line, so March of 2023, numbers are down pretty far from where they were in more normal years. Moving into the median rates, and we are up in every unit type. Studio doesn't count because it's statistically not enough of them. But we can see that rents are up for all of the unit types, except the 1 bedroom is down $50 a month. So there are your median rental rates and what is going on with the rental market in Southern California. Where do you think rental rates are headed in Southern California? Let us know in the comments below. Make sure you subscribe to our free weekly email newsletter so you don't miss out on a single market update. And hey, speaking of market updates, you're not going to want to miss this next video. Thanks for tuning in. This has been Christian Walsh, Forever Agent with Wire Associates and Berkshire Hathaway Home Services. And we want to hear from you.